Okay, we will continue with chapter 16. This first one that we will do is number 11, predetermined factory overhead rate. So this medical center has a single operating room that is used by local physicians to perform surgical procedures. The cost of using the operating room is accumulated by each patient procedure and indicates and includes the direct material costs, drugs, medical devices, physician, surgical time, and operating room overhead. So we got direct materials, direct labor, and overhead. On January 1st of the current year, the annual operating room overhead is estimated to be $812,000. The overhead costs will be assigned to procedures based on the number of surgical room hours. This medical center expects to use the operating room an average of 8 hours per day, 7 days per week. In addition, the operating room will be shut down 2 weeks per year for general repairs. A. Determine the predetermined overhead rate. Well, again, there's $812,000 total. There is 8 hours a day budgeted, 7 days a week. There's 52 weeks in a year, but 2 weeks are going to be used for repairs. That's 50 weeks, 2,800 hours. Our predetermined overhead rate is $290 per hour. Bill Harris had a 5-hour procedure. How much operating room overhead would be charged to his? Well, 5 hours times 290, $1,450. During January, the operating room was used 240 hours. The actual overhead costs incurred for January were 67 over or under applied. So 240 times a predetermined overhead rate of 290, that's 69,600. So they had actual of 67, so we applied 69,600. What came in was 67,250 actual. So our over applied is by 2350. All right, let's move to number 12. Entry for jobs completed and the cost of unfinished jobs. All right, so the following account appears in the ledger. So there is WIP, beginning, where they add some materials again, labor, overhead. All right, jobs finished during January are summarized as follows. So we have 1, 2, 3, 4 jobs. The sum of all of those jobs equals $560,240. So we're taking it out of WIP and, of course, putting it into then finished goods. Letter B, determine the cost of the unfinished jobs. Well, again, we had $85,800 at the beginning. It's on bottom of page 823. We added those three costs of direct materials, direct labor, and overhead. Then we took away $560. So what is still left in WIP? $76,760. Number 13. This publishing company began printing operations on March 1st. Jobs 301 and 302 were completed during the month, and all costs applicable to them are on the related job sheets. Jobs 303 and 304 are still in process, and all applicable costs except factory overhead have been recorded on the related cost sheets. In addition to the materials and labor charged directly to the jobs, $4,500 of indirect materials and $8,200 of indirect labor were used during the month. All right, journalize the entry to record each of the following operations: direct and indirect materials. All right, so for letter A, looking at materials only, if you go across jobs 301, 302, 303, 304, you're taking away 60 grand. So 12,500 plus 18,750 plus 9940 plus 14,310 is that is your 60 grand. Of all of that, those are direct, so that goes into WIP. And then in the reading, it says there were materials of $4,500 that were indirect. So there's your $4,500. Let me state that again. I just misspoke. So if you add up the direct materials of 12,500 plus the 18,750 plus the 9940 plus the 14,310, that's the 55,500. Adding then that indirect will get you to the 60. Letter B, the direct and indirect labor. Once again, in the reading, it said it was $8,200. go around and add up all the direct labor for 4 jobs, 31,000, 42,200, 16,500, and 17,100, and we'll have 106,800. And that's all labor. Letter C, factory overhead applied to all 4 jobs. A single overhead rate is based on direct labor cost. All right, well, if they're all used the same, then what we can do is look at jobs 301 and 302 because those factory overhead is already applied. So let's just look at job 301 for instance. They applied $77.50 to overhead. Well, $77.50 divided by, it's based on labor cost, so the 31,000 gives us a rate of 25%. See if it's consistent. 302. 10,500 divided by the 42.2 is also 25%. So if we are looking at all of the labor is 106,800, we don't use the indirect, 106,800 times 25%, that would tell us then we are taking 26,700 out of overhead and applying it to the job. We can use that rate because we see in 301 and 302 it's 25%. Then if we were to add up all of 301, 302, 303, 304, the direct labor costs, which we did right here, 106.8 times that predetermined overhead rate, we're going to apply that to the job. Letter D, the completions of 301 and 302. So if you look at 301, there's 51,250 in cost total. Job 302, 71,500 in total cost. We're taking it out of WIP and putting it into finished goods. So now, as far as we've gone in this exercises, we've looked at direct materials, direct labor, and overhead. And then we've seen the flow of going from direct materials into WIP, and then from WIP into finished goods. Number 15, job order cost accounting. And it asks you to provide the journal entry for each of these transactions. Charged 175 hours of professional time to this breach of contract suit at $150 per hour. So, of course, there is no direct materials in a law firm. So what we're going to do is go right from salaries into WIP. So we don't move a direct material into WIP, but we will have wages that go into WIP. Number 10, or July 10, reimbursed travel costs, $12,500. So we paid it, add it to the job. 260 hours of professional time was charged at $185. Again, there's our payable, put it into the job. On the 18th, received an invoice for some consultants. We pay it, incur the liability, charge it to the job. Applied overhead at $62 per professional hour. Well, if we add up all of the hours, professional hours, 175 and 260, that was a total of $435 out of overhead to the job. Paid administrative support salaries, cash, that is an indirect, goes into overhead. Used office supplies, $4,000 out of supplies into the overhead account. Putting it in. Paid professional salaries, $74,350. So now these were accrued, so we're taking it out of payables and paying for it. And then billed $172,000. So if you notice here, this is the 2 journal entries. So in previous chapters, certainly in Principles of Accounting 1, we always said whenever we sell inventory, there is 2 transactions. Well, there's no inventory here, but there is still 2 transactions. First, the sales transaction, $172,500. And then there is not a cost of goods sold, but there's a cost of services. So adding up all of our cost of services, $26,250, $12,500, $48,100, $30,000, and $26,970. All of those are going into WIP. So out of WIP to the cost of goods sold. How much office overhead is over or under applied? Well, we just put in, so what did we incur? Put into the bucket right here, 28,500 and the 4,000. Okay, so that's our 32.5. But right up above that, right here, we applied, took out of the overhead and put it to the job right here. So it's a credit, 26.9 cents. So we are, in this case, under applied by 55.30. Not good. Determine the gross profit. Well, the gross profit is 172,500. There's sales less. And there's two parts to this number right here, cost of services. It's certainly this 143, and that's probably where most would stop. That's the cost of services. There's our gross profit. However, what we really should add is also another 55.30. We didn't apply enough. So that also is reducing the gross profit from this job. So we're left then with 23,150. All right, problem 1A. Again, it says here, journalize these transactions. Okay, so materials purchased. Here we go, out of AP, or putting it in AP, and we bought materials. Materials requisitioned, 290 and 8150. So 8150 is overhead, and the rest goes into WIP out of materials. So here's our direct materials account, journal entry, letter C. Labor was used for 89.5 is direct, 34.2 is indirect. So here's our wages payable. So we got our direct materials account, journal entry here, direct labor here, going into WIP, overhead, all being charged to wages. Letter D, other costs incurred for factory overhead, 600,000, selling 150, administrative 100. So administrative expense, selling expense, putting into the big bucket of overhead, 600,000, all getting charged to AP. Letter E, prepaid expenses, overhead, 18,000, selling 6, administrative. Overhead, 18, selling 6, administrative, all coming out of prepaid. Depreciation on the building, 30, office equipment, 7,500, factory equipment, 60. So factory overhead, right, because it's depreciation. There's some depreciation expense for the office building, office equipment, all accumulated 97.5. What's interesting about this entry, so that you see it, is typically we've always learned when we incur depreciation, the debit is to depreciation expense and the credit is to accumulated. And that's correct. The only thing to remember here is when we're doing job order costing, if there is depreciation on this factory equipment, which is indirect, it needs to really go to factory overhead. And maybe for all practical purposes, you can, in your mind, write, well, this is depreciation expense, but it's for factory overhead. G, factory overhead costs now applied. So that means we credit overhead, taking it out and putting it to the job. WIP. H, cost jobs completed, 1,425,000, so it's coming out of WIP into finished goods, and then cost of goods sold. So they're not giving us the sales entry, but just the cost of goods sold, taking it out of finished goods and debiting cost of goods sold. So we don't have the typical AR sales as our first entry, and then this being the second entry, but we understand the concept. And then the last problem that we're going to look at for Chapter 16 is problem 2A, and I'm just going to do a overview of 2A. So if you notice, it's all the same type of journal entries again. First, we're buying materials, then we're taking materials, and this is a much more involved entry where we have both materials and wages in the same entry, applying it to the job and overhead. Here, we're incurring some more overhead and pay for it later. Here is our same depreciation entry, just like the one before. Letter E is where we are starting to apply some of this overhead to the job. And then letter F, there are some jobs that were finished, so we're taking it out of WIP and putting it into overhead. And they calculated all the costs incurred for these 4 jobs, direct materials, direct labor, and overhead, and moving it into finished goods. Letter G is where you can see they actually have the 2 journal entries for a sale, AR in sales and cost of goods sold in finished goods. So the calculation of all of the jobs that were completed, 301, 302, 303. So there was 3 jobs that were completed, 301, 302, and 303. So the total computation of the cost is $26,280. All right, so that takes care of letter G. There's step 2, the T accounts for both WIP and finished goods. So based upon the journal entries that we're doing here, you can do the T accounts for just these 2 accounts, WIP and finished goods. Number 3 shows the schedule of the unfinished jobs. Well, according to letter G, the finished ones were 301, 302, and 303. So what's left is 304 and 306. Excuse me. The jobs that were completed according to letter F is 301, 302, 303, and 305. The jobs that were sold were only 301, 302, and 303. So we still have 305 sitting in finished goods. So the unfinished, showing what they have got for direct materials, direct labor, and overhead, $11,840. Those are the 3 unfinished. 2 unfinished, 304 and 306. Number 4, it says prepare a schedule for the completed, which we said that the 4 jobs that were completed were 301, 302, and 303, and 305. These are the only ones sold. So the one that's still sitting in finished goods is job 305 for a total cost of $12,555. Direct materials, direct labor, and overhead. 304 and 306 are still in WIP, and they've got direct materials applied to it, direct labor, and overhead, and there's a good chance there's going to be more added because it's still in WIP. That takes care of chapter 16. I would make sure to re-review these videos again, these exercises, making sure we understand the flow of the cost, know the debits, the credits, and you should be fine. Thank you.